looking for lower prices. Um, More willing to be patient this morning because FOMC on Wednesday. Preferably we do trade Monday, but because there is high impact news on Tuesday and there's only medium impact news on Monday or today, I wasn't expecting or anticipating one directional movement. So I mean my higher time frame draws the monthly opening price, which is just above here, but I have to stick by what the daily range is telling me opposed to the higher time frame order flow, because that's not really useful to me on a Monday where I'm looking for low hanging fruit scalps. So right now I'm looking at I was looking at this inversion breaker, which mean threshold aligns with the inversion fair value gap consequent encroachment. I thought that we would seek that as a discount overnight, but we go into this morning with this still intact. So I think that we could run the sell side and use this inversion fair value gap premium as a place to go higher, but I don't expect that to happen today. I would have expected maybe Monday to move lower if Tuesday didn't have high impact news, but since Tuesday has high impact news, I expect that it will put in the low of week, and then FOMC will just do its thing. I mean, it's obvious it's predisposed to run above this monthly opening price to this external buy side. So right now we're just holding. ES is just holding inside of this new week inside of the new week opening gap, obviously. Overnight we came above the midnight opening price after engineering relative equal lows. So we're engineering relative equal lows to get people to buy, and as we're running it up, getting them to think that they're in profits, we're actually just taking the buy stops of the people that shorted this resistance and this break of this low. So we just took out shorts, just pulled in longs, and now we are running back on them. So now the low resistance liquidity run will happen because both sides of retail have been pulled out of the market. So we've delivered a buy side above the midnight opening price, delivered that to higher time frame premium array, this rejection block. To this rejection block, I'll just take that off so you can just kind of visually see that's what it's intentionally delivering it to that premium and then going lower. And then SMT forming on the high is one of the confirmations to this valid smart money reversal. CISD, break of an intermediate term low right here, spacing back lower. As we're trading above the Asian session's high, I think this is the Asian session high, you can see we're trading above it and we're spending time there. You can see the volume in the candles as we're leading up to it, and then the volume of the candles as we're leaving it, and then the time it allowed itself to spend above here before going back lower. So I like that. Allows the accumulation of shorts within buy side liquidity. So ultimately looking for lower prices. I'm not trying to rush anything right now because I'm trying to see if we're going to have a 930 protraction. I'm trying to find a premium array that we can really use to observe how price is holding. I was looking at, actually let's go from the 1 hour. So there's a small 1 hour inefficiency right outside of this wick. So we could look for that, which is somewhere around here, and that would make sense because that would make sense because I was looking for the consequent encroachment of this wick. So I think ultimately I'm going to use this wick. See if we can get a 930 protraction up into here. Hopefully by 10 a.m. We can already be below this. So as we're trading into the macro, we can already be healthily below this wick, because I want to be inside like the first half of the macro, but I want to also have enough time to be able to see, is this going to give me confirmation by closing below this, the consequent encroachment of this. Because if it closes below this wick, then I'm looking for the sell side below it and this inefficiency here, which I'll just, for future reference, I'll just mark out right here that it's going to seek this sell side inefficiency. So by me waiting for, not really waiting, but preferring that price is somewhere around here during like 9:55, that'll give me confidence that the 15-minute candle that'll close to close off this 4-hour candle will give me confirmation in confidence in staying inside of a position going lower. Again, this purple shaded area is just the inversion breaker from the other side of the range. Just make that light. There's no reason for that to really be important right now. And once NQ gets below this, it'll be the first one to run. It'll be the first one to run, and it'll be pretty easy to kind of frame risk, because once it goes below this new week opening gap, all of this price action is balanced. I mean, we could look for to put it above the consequent encroachment of this inversion, with maybe a little bit above, just in case it wants to clear this high. But if it comes below this, there's really no need that it should come back to the consequent encroachment, use it as support, or come back above this low, use it as support, above the consequent encroachment, use it as support, and then back above it. If it goes back above it, that'll be relatively good stop placement. So I already like how this is forming, just because I can already see I'm waiting for NQ to get below this level here, and then it'll run, and then I can pretty much wait for that and then get a free trade, a free confirmation, a free trade, and I already have good my eyes set on where I want to put my stop loss. So, and where that stop loss will be valid, and where the trade would be invalid, so I'm not worrying if I do get stopped out, if, hey, is this like, is this still a valid trade? Should I get back and chase or what? So I'll be back in about 8 minutes. We back. There's a small inefficiency right here. And then these volume imbalances. I'm sure there's a specific way that I'm supposed to draw these. Like this or something. But I'll just draw it like that. Okay. So, we can see it is definitely not holding. So I think that this is honestly a great place to enter, even though it's pre-macro. If I can, try to get back up inside of this volume imbalance. I'll just sell one, just because I can't really manage my risk yet. So I'll put it above this. I just want to see the dollar amount. $16. I'm pretty alright with that risk. So let's go to my risk calculator. Above the consequent encroachment of this inversion wick right here. Yeah. So points. She's gone. Usually I wouldn't be in this so early, and I'm still not gonna put a lot of my size on yet, because I'm just gonna wait. Now that it's cleared below this low, I don't think that it's coming down here just to wick it out like this. I definitely think we're drawing down into this sell side inefficiency. Notice how we're just staying inside of this volume imbalance. Too clean. But we're patient. Getting below that would be ideal. So we're already trading inside of that inefficiency right there. This is a weird dump for a Monday with no news. Right to the C. So I'm not going to add any more right now. well, yeah, I'm not gonna add any more right now. Just for, actually, I'll get one if we can come back up. If it'll let me, if it comes back up right to the consequent encroachment right there. If not, I'll take it as it's breaking that low. And then that's my full risk size for this morning. Well, it's honestly, it's still not my full risk for what I wanted to risk, so I might be willing to add one more. So as we're getting through that sell side, I'll wait for like a 5-minute close below the CE of this, the inversion fair value gap. And I guess I could start looking for where my partials will go. So if we're trading within a discount array on ES, as NQ maybe gets down below this low, I don't really demand that it goes lower again, another one of those days, then I'll look for a partial if NQ is trading like below this low and ES is within maybe one of these wicks. Okay, I'm gonna get rid of one of these. It's just like obnoxious. Actually, I'll keep the inversion for value gap on there. So I'm really waiting for the macro. See how we respond to that. So now my risk is break even because I don't want it to really come back above this new week opening gap. Right to plan, and then we'll see how this closes. If it, I'll definitely be willing to add like one or two more as if this 15-minute candle closes below the consequent encroachment of this 1 hour BISI. Okay, I'll just stay on the 1 minute, I guess. Watch how we respond to the top of this. I don't. Yeah. Institutional order flow entry drill. So now I anticipate we're probably just gonna hang around until the macro-ish. I was gonna say watch how we respond to the top of this, and it still can because we haven't closed yet. But I'm just gonna steal this from over here. We're just poking at the sell side liquidity, or where the sell side liquidity was. See how, like, you could just see, like, you don't even need like a 15-second chart to see that price was just poking around the consequent encroachment of that. So because we've gone to the high I demand that we're going to kind of try to get out of that with a little bit of speed. I'm going to add one right here. And then that's really all that I can add for right now, because if if I add any more, then my I'll go into drawdown and my invalidation has to be above this, so I'm willing to lose $35. It's fine. It's just holding until macro, so yeah, I like that. That was a good management of position. So I'm actually gonna watch NQ instead of ES, even though that's what I have the position open on, because NQ is kind of determinative of how I'm going to manage the rest of this trade. So I'm going to be looking for the 945, the 950, $10.10, and the 5 minutes after. Okay, so I'm not going to use this 1 minute imbalance anymore. I'm going to be looking at the consequent encroachment of this wick, which might even be similar consequent encroachment to the 1 minute, but didn't wait. Again, I wouldn't really worry myself too much about going down into this BISI. I think that it was used to deliver us to a short-term premium, and I don't demand that it delivers right away, because I'm still waiting for the time that it's going to deliver. So I'm going to make a plan to exit. So I'll be looking at this sell side wick. This is a premium now. So I'll be looking at this wick and then the sell side that's below it. Look at the responsiveness to that. We can find the upper quadrant, but we don't spend time there, especially as the weaker instrument of this trade. It doesn't spend time there, so I'll allow it to come up to the upper quadrant, right there, but it shouldn't spend time there. No, I'm not concerned about what I could have had, what I should have had, what I would have had. Not concerned about that. Concerned about what the price is telling me right now. You see, before, like 3 months ago, look at that close below the sell side liquidity. I probably would have left my stop loss above these highs. or at the low of the new week opening gap, and it would have been like, I don't want price to come back here at all, and then I would have got stopped out because of spread. So we could form an SMT here going into the macro, but that doesn't happen. I'm gonna say look for the worst case scenario and look to see. This is seek and destroy though. We'll see. One minute. We're still weak. I'm not concerned. If this were like maybe like a position where I had like regular risk, like $300 of risk on, I might be more willing to take some off in profit and then roll stop break even, just seeing the conditions that we're in. But I mean, the risk is so minute, and we're still heavy, even though NQ should be the one holding weaker. That could switch, and ES could be the one end up being weaker. So I'm not really concerned about doing anything. Definitely looking for the sell side liquidity as a draw. Time. It's just time. What was I looking for as not as an invalidation, but I was looking for a 15-minute close below this, below the consequent encroach. So perfect. I would have liked that it closed below this inversion fair value gap, consequent encroachment. So I'm going to be looking to see how this macro prints, and if this macro doesn't take us where we need to go, then I'll be willing to see some partials taken off and then stop break even, just solidify whatever we have on. This looks nice and strong. So tempted. I'm so tempted to take a partial. Don't do it. Don't do it. Your stop loss is where it needs to be. I mean, it's just pulling up into this BISI or CIBI, sorry. My stop loss is where it needs to be. Oh no, $38. All good, all good. I mean, again, perfect management of risk. I mean, what would have happened? I'm selling pretty much the high. I'm selling pretty much the high. Managing really good. And if this got that invalidation, then what? I would have. This was a 1 to 8. I'm more than happy to let that go for $38 in risk on a 5 contract position. And look, your stop loss does exactly what you need it to. It does exactly what you need it to do. Because now I knew if it comes back above the consequent encroachment of this new week opening gap, that's not good. That's not preferable. Like, I wouldn't want to be in this. A 1 for an 8? This isn't even 1R. This is like $1, essentially. $1 for what would have been like, this easily could have been a $600 trade. Like, there's no way that I could ever be upset about that. And I'm not. That's beautiful. So I'm just gonna collect the data. I mean, a seek and destroy. It's probably, I mean, it couldn't. I don't really care. Again, I'm willing to leave that $38 on the table as risk and let myself get stopped out. Then, and let myself either get stopped out or get 550, but like partials for like $100 isn't worth it. So that's the trade from this morning. Nothing crazy. I probably won't be taking any more trades the rest of this week because I'm not going to be looking for anything FOMC. I'm not going to be looking for anything post FOMC. So that'll be good. I mean, it might just want to be weird, and I mean, you can see how it's the same logic from up here as we're spending time above it and displacing back lower. You can see we're spending time below this sell side and displacing back out of it. And the failure to close below that inversion fair value gap. And you can just see the respect of the consequent encroachment of that 1 hour SIBI or BISI after hitting the low, coming back up and then leaving it. This is where you would find an inversion fair value gap set up, and you could take that back up to maybe equilibrium, maybe midnight opening price. But yeah, beautiful, beautiful, beautiful. So this might be like a weird day, or not a weird day, but it might end up running these buy stops, but I don't really care about that. I mean, yeah, again, just beautiful. Even during the macro, I probably would have ended up taking a short around here, somewhere around here, probably at the low of the new week opening gap, and I still got stopped out. But I mean, if I look at these executions from like the outside in, I'm saying, yeah, he probably won that trade. But, you know, it is what it is. No outcome is guaranteed. Alright, I'm off.